Did you know that millions of Americans who rely on Social Security could miss a payment this year, not because of anything they did wrong, but simply because they didn't know the rules had changed? If you receive Social Security benefits, what you're about to hear in the next few minutes could protect your income, your peace of mind, and your financial security. Stay with me, because this one is important. If you find this helpful, please hit that like button, subscribe so you never miss an update, and drop a comment below. I'd love to hear how these changes are affecting you personally. Now, let's get into the heart of what's happening, because the changes taking place right now at banks and at the Social Security Administration are more significant than most people realize, and the sad truth is that a lot of recipients are finding out about them the hard way, after something has already gone wrong. Let's start with the biggest change, the one that's been quietly rolling out and is now fully in effect. Paper checks are ending. That's right, if you've been receiving a paper check in the mail every month, that era is officially coming to a close. Starting September 30th, 2025, the Social Security Administration will no longer issue paper checks for benefit payments. This is a firm deadline, not a soft suggestion. After that date, if you haven't made the switch, your payment could simply not arrive. Now, I know some of you have been receiving that paper check for years, maybe decades. There's something familiar and reassuring about opening that envelope, seeing your name printed right there, and taking it to the bank yourself. A lot of folks of our generation grew up trusting paper. It was tangible, it was real. But the government has made its decision, and the good news is that the alternatives they're offering are actually pretty solid, once you understand how they work. All Social Security recipients must now receive their funds one of two ways. The first option is direct deposit into a checking or savings account. The money goes straight from the government into your bank account, usually arriving right on schedule, often early in the morning on your payment date. No driving to the bank, no risk of a lost or stolen check in the mail, no waiting. The second option, for those who don't have a traditional bank account, is the Direct Express Debit MasterCard, which is specifically designed for Social Security recipients. The government loads your payment directly onto the card, and you can use it anywhere MasterCard is accepted, withdraw cash at ATMs, and even pay bills with it. If you're still receiving paper checks right now, this is your moment to act. You'll need to contact the U.S. Treasury and either switch your payment method or, if there are very specific circumstances that make electronic payment genuinely impossible for you, file a formal waiver request. But don't delay on this, the deadline is real, and the process takes time. Now, here's where things get a little more personal, because the next change affects anyone who needs to update their banking information, and this is something that trips people up constantly. The SSA has made a firm rule: you can no longer change your direct deposit information over the phone. Not with a customer service representative, not even if you've been a recipient for 30 years and they know your voice. This policy was put in place specifically to combat fraud, which unfortunately has become a serious problem targeting seniors. Scammers were impersonating recipients and rerouting their payments, so the SSA shut that door entirely. To update your banking information, you now have two options. The first is to use your personal, My Social Security online account at ssa.gov. If you haven't set this up yet, it's worth doing. It lets you manage your benefits, check your earnings record, and make updates securely from your own home. The second option is to visit your local SSA field office in person, where a staff member will verify your identity before any changes are made. Yes, it takes a little more effort than a phone call used to. But it also means your money is much safer. Let's talk about timing, because this is where things can get a little confusing. Once you make a banking change, either online or in person, the SSA has actually gotten much faster at processing it. Updates that used to take up to 30 days are now often reflected within a single business day. That sounds wonderful, and in many ways it is. But here's the catch that catches people off guard: even though the SSA updates its records quickly, the actual deposit into your new bank account may still take 1 to 2 full payment cycles to show up, because your new bank also needs time to process incoming payments. So picture this: you switch banks in October, feeling confident that everything is in order. November comes around and your payment doesn't arrive in your new account. Where did it go? This is why there is one rule, one golden rule, that I want you to remember above everything else today: never, ever close your old bank account until you have received at least one full Social Security payment in your new account. Just let the old account sit there a little longer. The small inconvenience of maintaining two accounts for an extra month or two is absolutely nothing compared to the stress and financial disruption of a missed payment. Consider it your safety net. Here's something else worth knowing, and it's a bit of good news for a change. Some banks are now participating in something called the Automated Enrollment Process, or ENR. Under this arrangement, your bank can actually send your updated banking information directly to the SSA on your behalf. You don't have to do anything extra, your financial institution handles the communication. Not every bank offers this yet, so it's worth a quick phone call or visit to ask your bank whether they participate. If they do, it can save you a trip to the SSA office. Now, let's zoom out for a moment and talk about your actual payment amount, because 2026 brought some meaningful changes there as well. The cost of living adjustment for 2026 is 2.8%. For the average retiree, that works out to roughly an extra $56 per month. That's not life-changing money, but over a year it adds up, and it's meant to help your benefits keep pace with inflation. Think of it as the government acknowledging that prices at the grocery store, the pharmacy, and the gas pump have gone up, and trying to give your check a little more reach. However, and this is important, there's an offset that many recipients don't fully anticipate. Medicare Part B premiums are automatically deducted from your Social Security deposit every month. For 2026, that premium has risen to $192.70 per month. When you do the math, you can see that for many recipients, the Medicare increase will absorb a meaningful portion of the COLA raise. Your net gain may be smaller than you expected, and it's worth adjusting your monthly budget accordingly rather than being surprised when your deposit arrives. There's also one more piece of news that applies to a specific group of recipients, and if this is you, it is genuinely good news that has been a long time coming. Under what's called the Social Security Fairness Act, certain retirees who were previously penalized under rules known as the Windfall Elimination Provision and the Government Pension Offset, WEP and GPO, have now had those reductions reversed. If you spent your career as a teacher, a police officer, a firefighter, or in certain other public service roles, you may be entitled to retroactive lump sum payments covering back benefits you were owed. These retroactive deposits have been going out to eligible recipients throughout late 2025 and into 2026. If you think you might qualify, this is absolutely worth looking into, either through your My Social Security account or by calling the SSA directly. When you step back and look at all of these changes together, what you're really seeing is a Social Security system that is modernizing, tightening its security practices, and trying to get money into recipients' hands more reliably and more safely than ever before. The adjustment period can feel frustrating: new rules, new processes, new things to learn. But understanding exactly what's changing and why puts you in the driver's seat. You're not at the mercy of these changes, you're prepared for them. Coming up next, we're going to bring it all together. I'll walk you through a simple checklist of exactly what to do right now based on your own situation, so you leave today knowing precisely what action to take. Whether you're already set up with direct deposit or you still have questions about making the switch, we've got you covered.